Hello, everyone. Aaron Gaines here with Landmark Financial Services, coming to you again with another student loan topic. Today, specifically public service loan forgiveness, or PSLF. There's mainly five things I want to go over today. One of which is what is PSLF. Secondly, why is this program important? Three, how to complete the form, where to sign up, and how to get that going. Four, how to look up whether or not your employer is eligible, whether or not you are eligible for public service loan forgiveness. And lastly, just to show you a quick little demonstration of maybe a simulator of what someone who is currently on public service loan forgiveness would look like, and potentially what their income-driven repayment plan would look like. Okay, so what is PSLF? So if you go onto the federal student aid website, studentaid.gov, you can find all of this information here. Kind of tips and tricks on what it is. But very simply, PSLF is a program for people who work in the public service. So basically, if you work for a 501c3 nonprofit company, a great example, I live in Virgins, Vermont. I graduated from Virgins back in high school. Virgins is a non-profit 501c3. So if you are a teacher working for Virgins, then you are technically eligible to sign up for PSLF if you have qualifying eligibility requirements on the federal student loan side. And so, as you notice here, it says after you submit your PSLF form to MOHELA, if you have direct loans and work for a qualifying employer, then you will receive a payment count of the number of payments that you've made toward PSLF while you're on an income-driven repayment plan. So I'm going to step back for a second and just kind of explain, why is everyone talking about PSLF, and why are so many people not getting granted PSLF? Well, there's a multitude of reasons, but there's a study, there's some statistics out there that basically 95 to 98% of people that have applied for PSLF have been either turned down, and again, that's because of a multitude of factors, but the two main reasons is because, one, their federal student loans, they either don't have federal student loans, or their federal student loans are not direct. And as you notice here, it says you have to have direct loans in order to sign up for PSLF, or they signed up for an income-driven repayment plan and did not sign up for PSLF. They are two totally separate programs, and a majority of people who are expecting forgiveness don't understand that. Okay, so why is PSLF, or public service loan forgiveness, important? Well, it's important for people who are coming out of school with an unbelievably huge amount of debt. Okay, and just to put into perspective, I have what's called an amortization calculator here. And on last week's video, I can just show you from last week's total balance. I think it was myself, Aaron, had a total balance of $26,444. Let's just assume a 4.2% interest rate, and we were going to do that for 10 years. That monthly payment would be roughly $270 for 120 payments for 10 years. Well, if you bump that number up and call it 100,000, well, now we're talking about like rent money. Okay, we're talking about a significant payment going to student loans. And so what the income-driven repayment plans have done, and what PSLF has done, has allowed student loan borrowers to basically free up some of their cash flow, so that instead of getting hit with this crazy $1,000 payment, it allows them to make monthly payments that are more reasonable based off of their current budget, based off of their income. Okay, and so to go back to the public service loan forgiveness website, how would you even go about completing this? Well, first off, like I said, this is in conjunction with signing up for an income-driven repayment plan. So, and again, it doesn't have to be an income-driven repayment plan. I guess it technically could be a fixed plan, but for the most part, I don't know why you wouldn't sign up for an income-driven repayment plan if you're using PSLF. So first off, you would need to sign up for one of the SAVE, whether it's the SAVE plan, the IBRs, old IBR, new IBR, income contingent repayment plan, or the pay-as-you-earn, or PAYE plan. And once that has been set up, then you can go onto the federal student aid website, and there basically is this You can log in. You first want to log into the federal student aid website, but you would log in, and basically there's a step-by-step process on how to sign up for PSLF. I'll keep it very simple. You're going to fill out a form, whether it's physical or electronically, and basically it's going to ask for last year's tax return, and they're going to look at your taxable gross wages, and that's what your income is going to be based off of, right? And so if you remember from last week's video, um, they're going to take that money based off of your income-driven repayment plan, and each year you are going to have to what's called recertify your income. Because if you're making 50,000 one year and you're making 100,000 the next year, and you're not making the correct payments, then you are not, as it says here, you are not getting a qualified, you're not making a qualified payment. So you need to recertify your income each year. And so when you sign up for the form, it's going to ask you for information, one of which being your tax returns. But then the last important piece of information is you are going to need to have, whether it be someone from your HR or someone at your current employer to sign off stating that you are a current employee. And this is the kicker, you have to be working full time or at least 30 hours, depending on your employer, for you to be eligible. So there are a lot of strings going on here for you to even be eligible for PSLF. However, for the people that are eligible, this is a no-brainer. Okay, so that's technically how you sign up. Now, one thing I do want to show you, which I think is quite interesting, is some of you may be asking, well, am I eligible for PSLF? How can I check? Well, you can go onto the federal student aid website, and there's this tool called the Public Service Loan Forgiveness Employer Search. And so I've said before, I grew up in Virgins. Well, wouldn't it be kind of interesting to check and see whether or not if I would be eligible if I worked at Virgins Union High School as whether it's elementary school, high school, doesn't matter, as a public school teacher. So I was able to find the EIN number. You can find this on your W-2 when they send you your taxes, or you can find this most likely on your pay stub as well. I just Googled this information. And so let's just say that I'm currently working there. Again, this is just for just to see whether or not I'd be eligible. And so Addison Northwest Supervisory Union District is an eligible employer. So that's great, right? And so for people who are wondering whether or not they are eligible, I guess my first thing that I would instruct you to do is just go onto the federal student aid website and just put in there your EIN number, your employer's EIN number, and see whether or not you're eligible. Okay. And the last thing I wanted to show you today is basically a simulator based off of what I've personally seen a student loan borrower take out as far as their loans and how much they're making and what their actual total payments over a 10-year period would look like under an income-driven repayment plan and under PSLF. So I'm just using, this is vin.com. It's a student loan repayment simulator. You can find a ton of these out there. This is just one that I've found is reliable. And I'm just going to put in some random information. But let's say this person, the student loan borrower, graduated in 2020. Again, most people graduate in May, so let's just put that. They have $100,000 of federal student loans. Okay, 100,000 loans. It doesn't mean 50,000 private, 50,000 federal loans. This is 100,000 in federal student loans. So for this person, they most likely went to undergrad. They probably got somewhere in the realm of 25 to 30,000 in federal student loans, and then ended up going to get their graduate degree and took out another 75,000. Okay, now they've got roughly, let's call it $15,000 of unpaid interest with an average interest rate of 5%. Remember how I said the loan servicers are almost always going to automatically put you in a standard 10-year fixed repayment plan? Well, we're going to show you what it would look like for someone who owes 100,000 to pay that off in 10 years versus someone who pays it off in 10 years under the PSLF program. Okay. So yes, we are eligible. Let's say we are eligible for this example. Again, I'm just going to assume I'm making $50,000. Okay. Let's say I'm making $50,000 with an annual income growth rate of 3.5%. I'm hopefully going to be getting, a 3.5% raise each year. This could go up, it could go down, but we're going to assume it goes up. Let's say I am not married, I do not have any kids. That would also affect this calculation, but for this example, we're not going to go into that. For the tax rate, we're not really going to go into that because if we do get forgiveness under PSLF, all of this is tax-free, so we do not need to worry about this. We're going to assume that the HHS poverty guideline is going to grow at a 2.55% growth rate. Again, this could be plus or minus, but this is an estimate. It's a simulator, okay? And the growth rate on savings rate, we can just ignore because we're not saving money on the side. So if we run the simulation and we look at what the standard 10-year repayment plan would look like at a $100,000 loan with 5% interest, 1 month, the first monthly payment would be around $1,000, and it would take roughly 12 years to pay because of the amount of interest that is accruing as well, okay? So you would pay roughly $151,000 on that $100,000 loan over 10 years. You would have no amount forgiven and no taxes. The total cost of that $100,000 loan was $151,366. Boy, was that a lot of money. Holy cow. Now, we can look at a ton of different income-driven repayment plans up here. To keep it simple, let's just look at the SAVE plan or the Saving on a Valuable Education plan. Again, $100,000 loans, definitely multiple loans. Their monthly payment, based off of that $50,000 income, could be anywhere between $0 a month and $134. That sounds a lot better than $1,061. Now, I hope you guys are understanding just how impressive this is and the power that you, the student loan borrower, may have with regards to paying off your student loans. So, how long would this take to repay? Well, 10 years, right? Because if you're working for a nonprofit 501c3 and you continue to make qualified payments each month, you will have paid $20,604 over the course of those 10 years. Again, plus or minus, because this number is 0 to 134. You would have had $100,000 forgiven, $14,625 of interest also forgiven, a total amount forgiven of $114,000. The total cost of the loan would have cost you $20,604. I'm not sure what you're thinking, but I would much rather pay $20,604 than the $151. Okay, all while being able to utilize and free up roughly $800 to $900 of cash flow each month over those 10 years to put towards your 401k, 403b, towards a down payment on a house, towards literally anything you can imagine, your credit card bill, whatever you. Now, this is definitely not for a vacation. Let's just put that out there. But I hope you guys are starting to understand just the power of some of these income-driven repayment plans and what PSLF can do for you as a student loan borrower. I hope this was interesting. For next week, we will talk about maybe some more in-depth PSLF and real-world examples that I've dealt with. And so, yeah, stay tuned next week for some great content.